This is the Asia Trade. I'm Shery in Tokyo.
I'm Haidi Stroud-Watts in Sydney. The top stories this hour. Asian stocks are set to advance while oil gains as traders assess stalled Iran peace talks and a massive week for earnings and central banks. Bets on Fed rate cuts this year getting a boost as a path is cleared for Kevin Warsh's nomination as chair. A 31-year-old man is to face court on Monday after the White House Correspondents' Dinner shooting. He was said to be targeting Trump administration officials, although an exact motive remains unclear. And we speak live to the South Korean Trade Minister Yeo Han-koo about the AI-fueled export boom and the Iran war's impact on supply chains.
And Haidi, you said it's a busy week of central bank decisions around the world. And of course, we have big tech earnings to contend with as well. Already, we're seeing record highs for global markets. And you can see U.S. futures at the moment not doing much. But after closing near record highs, we're already headed for the best month since 2020. And of course, we have big tech earnings. Investors have been snapping up these calls on tech companies ahead of earnings results. Sentiment shifting toward a little bit more of a risk-on tone ahead of those results. And we are expecting the FOMC not necessarily to do anything, given, of course, that we're still contending with the latest headlines from the Iran war, the oil shock as well. Same story for the Bank of Japan and other big central bank decisions this week. We are seeing Nikkei futures at the moment under a little bit of pressure. This after we saw another week of gains already for equity markets in Japan. And remember, what we're watching today will be the Japanese yen, very close to that 160 against the U.S. dollar. And remember what happened just 2 years ago in the same month of April when the Bank of Japan actually did not move and did not hike rates. We saw the yen topping 160 and authorities having to come in to intervene. Also, do watch out for industrial profits out of China. Today, we also have big earnings for Chinese companies this week, including the likes of Geely and BYD as well, Haidi.
Busy week, and of course, as you say, Shery, we're still contending with a complete lack of certainty as to how or when this conflict between the US and Iran and Israel might wrap up. But take a look at what we're watching when it comes to oil. As you said it, we don't really have further details or progress over the weekend. Of course, we've had other sort of headlines dominating. We know that this round of talks and a trip potentially by President Trump is now put on hold for now. At the moment, this is the picture when it comes to trading in New York. Crude, we're seeing WTI higher by close to 2%, really holding onto those gains. The efforts to resume these peace talks stalling. The ceasefire is still holding, of course, but that chokehold when it comes to the key Strait of Hormuz waterway, with the blockade still in place, we're now entering a third month of disruptions. We know that the International Energy Agency now saying that this is the biggest energy supply shock in history as a result of this conflict. Taking a look at some of the other assets that we're watching, gold at the moment, we're seeing a bit of downside, about 0.6%. Really, the coming back to what we're seeing when it comes to the losses in gold that have really been incurred since the start of this conflict. And we're also watching the Australian stocks. Just to mention, it is a public holiday in some parts of Australia today on account of Anzac Day, but the ASX remains trading. We're looking like a pretty flat start coming off the back of 4 sessions of losses for Aussie stocks, Shery.
And Haidi, we're also following the latest on the breaking news development over the weekend. A 31-year-old man set to be arraigned Monday over Saturday night's shooting at the White House Correspondents' Dinner in Washington. The acting attorney general saying that the suspect was probably targeting Trump administration officials, but his exact motive is not yet clear. The president told 60 Minutes why there appeared to be a delay getting him and the First Lady to safety.
Well, what happened is it was a little bit me. I wanted to see what was happening, and I wasn't making it that easy for him. I wanted to see what was going on. And by that time, we started to realize maybe it was a bad problem, different kind of a problem, bad one, and different than what would be normal noise from a ballroom, which you hear all the time. And I was surrounded by great people, and I probably made them act a little bit more slowly.
Well, in the meantime, peace talks between the US and Iran have stalled after President Trump cancelled a planned trip by his top envoys. Tehran says it won't negotiate as long as it's being threatened.
It's very simple. Look, that whole deal is not complicated. Iran cannot have a nuclear weapon. It's very simple.
Is the ceasefire remaining? Will you continue the ceasefire?
Haven't even thought about it yet.
Did they offer anything in return to 20 years of suspending enriched uranium?
They offered a lot.
What did they offer?
They offered a lot, but not enough.
Let's bring our politics editor Laura Davison for more. And Laura, we know really other events over the weekend have sort of overtaken the spotlight when it comes to these impending talks. We know that the Vice President is not headed for this next round of talks, at least for now. Does it feel like momentum is being lost? Where is the pressure that we keep talking about, particularly when it comes to the pressure on the president?
Yeah, so right now there isn't quite the same pressure that we've seen. Trump declined to give another sort of intermediary deadline, like he's done in rounds past. If he set, a deadline from a couple days to a couple weeks for some sort of deal to be made, he didn't have much success with that. And so what we saw last week is him just saying he would extend the deadline sort of indefinitely, and he was waiting on Iran, essentially putting the pressure on them to have a proposal. There's been a game really of will they, won't they, both from the Iranian side and the U.S. side about sending mediators to Pakistan to talk. We did see Iran send an official over the weekend, but it was unclear whether he was there to actually meet with U.S. officials. He framed it more as a, sort of a tour of the region, meeting with Pakistani officials as well as other Gulf leaders as he toured around. The U.S. Didn't send anyone. Trump said he canceled a trip from J.D. Vance and other top envoys, Steve Witkoff and Jared Kushner, and going. And right now, we're seeing the president, of course, distracted by events over the weekend. Really focusing on the attack at the White House Correspondents' Dinner and the security situation therein. So this is, really a situation where you see the White House almost catapulting from crisis to crisis. And, while, the White House is a big operation, lots of people who focus on lots of different issues. This, of course, there's only so much capacity for the president to absorb so many things and be in so many places and focused on so many things at once. So this is, kind of adding another layer of complication, particularly when it comes to sending U.S. officials overseas when there's already concerns about security of U.S. officials within the borders of the U.S.
And how big of a complication is it that Israel-Hezbollah tensions seem to be escalating again?
This is, again, sort of another, it's a symptom of the broader, disarray here. Having the Hezbollah Lebanon ceasefire in place is sort of seen as a key to have these broader discussions move forward. And with this seemingly fraying over the weekend and over the past several days, this is a sign that, that this broader piece of the puzzle can't be brought together as well. This, of course, also raises, concerns, just as there's a bunch of different pieces that are also on the president's plate as well. We see he's supposed to be traveling to China here in the next 2 weeks to meet with President Xi. That initial trip was canceled because of the war. So we're just seeing a lot of things pile up and this puzzle get more complicated, not less, as we drag into, this 2-month anniversary of this war set to hit tomorrow.
Laura, you mentioned, of course, the shooting that we're also covering as well. Can you tell us the latest about that? And I guess there are a number of really extraordinary developments when it comes to how this played out. Are there concerns about security at this point?
Yes, after any of these events, like we saw, during the presidential campaign when there was assassination attempt on President Trump's life in Butler, Pennsylvania, there's a wholesale review at the U.S. Secret Service about what went wrong and how to prevent this in the future. But this was, really concerning. This is a big, one of the largest annual events in D.C., a ballroom with thousands of people. And the attacker was able to blow past an initial checkpoint, was not able to make his way into the ballroom, but was able to get closer than a lot of people really felt was comfortable, and before he was tackled and arrested and detained. This is a 31-year-old man from California. There are some initial charges related to firearm, procurement that have been charged. There expect to be more in a formal arraignment in Washington on Monday. But this has really rattled both the White House, the press corps in D.C., as well as raising a lot of questions about a Secret Service that has been, under fire and gone through several leaders here in recent years as there have been a series of security breaches, particularly involving the President Trump.
Bloomberg Politics editor Laura Davison with the latest. Coming up on the Asia Trade, we speak to the South Korean Trade Minister about threats to their AI-fueled export boom after the Iran war and the threat of high energy prices. Much more ahead. This is Bloomberg.
The Fed decides.
Regime change at the Fed is a matter of when and not if.
This is not a small matter.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
A series of shocks have interrupted progress.
We've completely priced out a rate cut for 2026.
This is a really tough time for all of us in markets.
There is nothing this institution can do in the face of the shock elsewhere.
Tune in to Bloomberg Surveillance. The Fed decides, starting at 1:30 p.m. Eastern.
US Senator Tom Tiller says he's dropping his opposition to Kevin Warsh's nomination as the next Federal Reserve Chair. Tiller says the Justice Department's decision to end a criminal investigation into Fed Chair Jerome Powell removes a threat to the central bank's independence. The move sets the stage for a faster confirmation of Warsh to succeed Powell, whose term ends on May 15th.
I am prepared, and with the assurances from the Department of Justice that the case is completely and fully settled, that the appeal would only be used to potentially abrogate or change the ruling for administrative purposes, not as a basis for reopening the investigation, and that the only way an investigation would be open would be a criminal referral from one of the most respected inspector generals there. I am prepared to move on with the confirmation of Mr. Warsh. I think he's going to be a great Fed chair.
The Fed is among major central banks delivering policy decisions this week and is expected to join the Bank of Japan, the ECB, and the Bank of England in holding rates steady. Policymakers are keeping a hawkish eye on fallout from the Iran war as higher energy prices and inflation risks dominate the outlook, and President Trump cancels planned peace talks with Iran. Take a look at how we're looking across markets early in the Asia session because, of course, we have the S&P 500 very close to record highs. A little bit of pressure in the future session early Monday morning, but global equities enter the week around record highs already. The S&P 500, in fact, is up about 10% since the end of March. We're headed for the best month since late 2020. And, of course, remember, we have big tech earnings this week. The dollar a little bit firmer early in the Asian session, Haidi.
Well, S&P Global Vice Chairman Daniel Yergin has warned that the Strait of Hormuz crisis represents the biggest energy disruption ever seen. Yergin told us that the impact extends far beyond oil, affecting assets including fertilizer, helium and aluminium.
One of the things that people didn't think about before this happened, if they thought about the Strait of Hormuz, they thought about oil. Maybe they thought about natural gas and LNG. They didn't think about fertilizer. They didn't think about helium. They didn't think about aluminum. They didn't think about petrochemicals. And it turned out that that region is much more integrated into the global economy because of all the economic development there. So it produces, about 40% of the world's helium, which you need to make semiconductors or MRI machines. So this is actually, unlike all the other things we were talking about in the last 20 years, this is a much bigger disruption of the global economy. But it's Asia because basically, economically, the Strait of Hormuz went east. 80% of the oil, 90% of the LNG went to Asia, and that's where the shortfall is in ways that people really didn't model.
I saw Fatih Birol of the International Energy Agency saying we are facing the biggest energy security threat in history. And I wonder if you agree with that assessment of the moment that we're in. I'm very curious what Dan Yergin's perspective is on this moment in the wider sweep
I think this is the biggest energy disruption we've ever seen. But as you say, it's ironic that we're not seeing the full price impact. And so time is really the key factor here.
When you look at this, is it so bad because geographically there's just really no alternative as there have been in some other conflicts? There, obviously there are pipelines that go out to the Red Sea, but you just can't get that volume through anywhere else. And as we've also been talking about, how concerned are you that this could be a chronic problem? Just because Iran agrees to something in the room doesn't mean they're going to change their minds if they've shown they have the capacity to shut this down.
Yeah, there was, until this happened, there was a thing called the TSS, the traffic separator system, where people understood that, okay, in an orderly way, this goes this way, this goes this way. Now there's going to be uncertainty over it, and it raises questions not only about the Strait, but it raises the question about freedom of seas on which the world economy and world trade really depends. So I think we come out of this, there's going to be an uneasiness about it, and so much will be critical as to what the outcome will be. Will there be an actual system and understanding of how this operates, or is it something that will fluctuate?
S&P Global Vice Chairman Daniel Yergin speaking to Bloomberg's David Gura and Christina Ruffini. Let's discuss the markets now with Bloomberg MLive strategist Mark Cranfield, who joins us with the latest. And Mark, of course, we have listened to that conversation about the uncertainty around the Strait of Hormuz, what happens to oil prices as well. And given the week of central bank decisions, is it really not that surprising that we're not expecting any big moves?
I wouldn't say we're not expecting any big moves. When you start the week with oil prices back above $100, and you've got a slew of earnings from the major tech companies as well, plus you really don't know how the central bankers are going to interpret the whole thing, the shortfall between energy prices in the near term and yet slowdown of economies in the longer term. There's plenty that can happen. I don't think we're in for a quiet week at all. And then, of course, you can always throw in the occasional headline that comes out from the US as well. So quiet, no. I don't think there's any chance of that this week.
No, to be fair, I was talking about no big moves from central banks. I mean, we are expecting those gyrations in the market, right? I'm in Japan, so I'm very much watching the Japanese yen. How closely are you watching the bond space as well? Because it's been interesting. The volatility hasn't necessarily been that pronounced in the rate space.
I think that's where, if you're going to get surprises from the central banks, it would be what they do to the market curves in terms of yields. Generally, there's been a bit of flattening in bond curves in the G10 space, and that certainly is, people go into this, they don't expect too much disruption in that. But certainly, with so many central bankers and with so many things up in the air, you definitely got the chance for some surprises here, particularly from the European Central Bank. They come into it with quite a split in between. There's a very big committee, more than 20 people on it. There's lots of varying decisions about whether they need to preempt, whether they need to raise interest rates early, or whether they need to delay it when they need more information about what the energy price impact is going to be. So certainly there is room, particularly with the press conference from Christine Lagarde, there's room for plenty of volatility around the ECB meeting. Even the Bank of Japan, Governor Ueda is probably feeling a little bit disappointed that he has to push back and not raise interest rates this week, but he wants to prepare the market to get the neutral rate in place for Japan before too long. So he may well push pretty hard to get expectations up for the June meeting, if not for July. So certainly whatever he has to say in his press conference could also cause a bit of volatility in the JGB market, and maybe even for the dollar yen as well. So what central bankers have to say in terms of their outlook, how they gauge the effects of energy prices and potential slowdowns in economies, consumers pulling back in the months ahead, that is the place where bond traders especially will be looking for any disruptions there, chances for them to make trades, whether the curve steepening is justified or whether they need to make changes to that.
Mark, we've seen some of the big tech companies that comprise, a quarter of the market cap of the S&P 500, and certainly the biggest drivers of this record rally that we continue to see. How much these companies, the likes of Meta, Amazon, Alphabet, really need to not just meet expectations, but perhaps over-deliver on expectations to try and counterweigh the negativity over the war and oil prices? That's what we've seen consistently over the past sets of earnings, whether it's from American companies or from Asian companies. It's all about the outlook. It's all about justifying to investors that these huge amounts of money which are going into AI data centers, into the whole build out of AI, whether it is justified in terms of what they see in the pipeline ahead. If the big tech companies in America can make investors continue to believe that there is even better times to come, that the profitability coming out of AI products is going to be just as good or even better than what they've seen so far, then investors will be in a very good mood. The equity rally will continue. It's a very high bar, and we've seen how quickly companies can get punished. You can just look at the difference between, say, a company like Intel, satisfied investors very well, the stock goes up very high. Then you look at the big Dutch company ASML, they were disappointing, the stock goes down quickly as well. So it's a very binary situation. Investors are not going to waste their time for too long. If companies don't justify what they're doing, stocks are going to go down pretty hard, but there's potential for a very good upside if they do meet
where the market is pricing for them in the future. So forward earnings are suggesting that they can continue to do so, but they need to justify it in how they position themselves. It's a very big week from that point of view, and it will make the difference between whether equity markets go into May on a very solid footing or whether they don't. It's really up to those big four tech companies.
Bloomberg MLive strategist Mark Seeger kicking off a busy week, big tech, but of course also the busiest week when it comes to earnings here in Asia as well. More ahead on the Asia trade. This is Bloomberg. The president of Chinese carmaker NIO says the country's auto market will stabilise this year, with electric vehicles continuing to gain share despite a weak first quarter. Lihong told us exclusively that the company remains committed to pure EVs and is targeting full-year profitability in 2026.
Looking at China's auto market consumption this year, specifically in the first quarter compared to the same period last year, retail sales figures for the entire market declined nearly 18%. This was due to a variety of reasons, including changes in the tax system, changes in electric vehicle subsidy policies, and intense competition. Manufacturers likely made a sales push at the end of last year, releasing some pent-up consumer demand. However, we still believe that the overall market size in China will remain at a similar level to last year, meaning that the next 9 months will see a significant increase compared to the same period last year. Another point is for companies like ours that manufacture electric vehicles. The electric vehicle category is still growing. Although the overall market pressure is relatively high, the trend of pure electric vehicles replacing other energy forms, especially gasoline vehicles, remains unchanged. We predict that in 3 to 5 years, more than 80% of new cars in China will be new energy vehicles, and 80% of those will be pure electric. Currently, there are probably only 2 companies worldwide still adhering to the pure electric route, NIO in China and an innovation company in the US. We think we will firmly uphold our choice and wait for this market window to open.
When are you going to be full year profitable? Can it be this year?
This year presents significant challenges. As you can see, starting in January, due to various reasons, raw material prices have risen very rapidly. This presents us with new challenges, but our goal and determination to achieve profitability for the entire year of 2026 remains unchanged.
Any plans for a battery swapping division IPO?
Currently, we don't have an IPO on the agenda. Our battery swapping service remains a service department within NIO. We hope they can set aside short-term financial pressures and focus on serving our 1 million car owners.
NIO co-founder and President Lihong speaking exclusively to Bloomberg Stephen Engel at the Beijing Auto Show. We, in fact, will be watching some more earnings out of China, including BYD and Geely as well. They're also expected to benefit from higher oil prices, boosting EV demand. More ahead on the Asia trade. This is Bloomberg. 5 of the so-called Magnificent 7 U.S. tech giants are set to report this week, with analysts expecting robust revenue gains as they continue to capitalize on AI investments. But Alphabet, Amazon, Meta, and Microsoft facing rising margin and cost pressures made worse by the war in Iran. Apple continues to grapple with higher memory chip prices and the risk of prolonged supply chain disruptions. We're also keeping a close eye on tech here in Asia. Massive gains from TSMC, Samsung, and SK Hynix have helped elevate Taiwan and South Korea in global equity rankings. This chart also showing tech-heavy Asian markets muscling past their European counterparts. For more, let's bring in our Asia equities reporter, Sang-mi. Sang-mi, I've just mentioned some of the challenges that U.S. tech companies face, but across Asia, we're seeing valuations lower, perhaps a bit more appetite for investors to come in and continue this AI surge higher?
That's right, Shery. We're seeing about $4.3 trillion of market cap for Taiwan, and it has surpassed that of the UK just earlier this month. And South Korea is about to do the same, just away 140 billion, in fact, to catch up the UK. And UK being like the biggest market cap in across Europe, and it's done the same for Germany and France. So these two North Asian countries are really taking over the European equity market one by one. And we're seeing this because it really trickles down to these three companies, right? TSMC, the logic chip maker in Taiwan, Samsung and SK Hynix in South Korea, behind these AI chips. And it's actually, you can see those data in the export shipments, right? So in Taiwan, we have seen the exports in March rally the most in the fastest pace in 16 years. And for South Korea, it's been rising 40% the second for the two months in consecutive months we have seen. So we see these data. It's really, you can see that they're exporting these chips across the world, and these are leading to this unstoppable rally in equity markets.
Is it time to get a little bit cautious about just how much influence these tech stocks have in Asia?
There are these concerns, and some investors are noting that there are these weightings, right? SK Hynix and Samsung make up about 40% together in Kospi index, and for TAIEX, it's the same. For TSMC, is again taking up almost half of the entire benchmark. So that does point to that concentration risk. But in fact, when you look at TAIEX, the Taiwan's benchmark, the TSMC's weighting has been coming down a little bit because it's been trickling down, through other supply chains like Delta Electronics and MediaTek. So investors are saying that as the AI integration becomes more advanced and people actually need more of the supply chain, not just the chips or the memory chips and the logic chips that we talked about, it will continue to broaden out. And so the concentration risk is not so much of a problem right now.
Our Asia Equities reporter Sang-Mi Chow there. Let's get you the latest when it comes to some of these corporate headlines this hour. And a social media account affiliated with Chinese state media says DeepSeek's delayed release of its V4 model points to a shift towards deeper integration with China's chip ecosystem. The startup on Friday released preview versions of its long-awaited new model, but analysts have told Bloomberg that it fails to narrow the gap with leading US products. The account says DeepSeek spent months working to optimize performance using Huawei chips. Watching Nomura shares at the Tokyo Open after it posted a second straight year of record profit fueled by Japan's market rebound, even as fourth quarter earnings missed estimates. Net income of Japan's biggest brokerage rose nearly 3% from a year earlier. Nomura has benefited from volatile global markets and a boom in investing and deal making at home.
With regards to the situation in the Middle East, if the supply chain changes significantly, then we will have to implement a structural change in strategy, and this could affect M&A activity in the long term. But as of now, we're not envisioning such a scenario.
More ahead here on the Asia Trade. This is Bloomberg.
We're about 20 minutes away from the open of markets across Japan. Take a look at how we're setting up. A little bit of upside for Nikkei futures. This after we saw already 3 weeks of gains for Japanese equities. The yen weakness continues, headed towards that 160 level and weakening early in the Asia session already. The Bank of Japan, of course, is a big news this week. It's expected to hold at that 0.75% rate. it struck a hawkish tone back in March after the oil spike, but right now markets pricing in almost virtually no rate hike at this point. Bloomberg Economics expects a hike in June. Let's get more on the outlook for the BOJ with our economy and government reporter Erika Yokoyama, who joins me here in the Tokyo studio. So we were at markets pricing in more than 70% of a rate hike just a few weeks ago to virtually nothing. What's going on?
Yeah, right. So Ueda successfully communicated and eased expectations for the rate hike in April. And, as you said, tomorrow we are expecting the rate, a stand-pat decision at 0.75%. And probably the bank will heighten uncertainty over the Middle East for a reason. And the likely decision, as you said, is already largely priced in by the market. So the real focus is when the next rate hike will be. Is it going to be June, July, or can be later? And we could possibly see the message through either the policy statement, especially on the section of the voting balance of the 9 board members, or simply like Governor Ueda's press conferences as well. And, another thing we have to watch tomorrow is that the bank is expected to raise inflation outlook for the current fiscal year significantly, reflecting the recent surge in oil prices, right? So if the upward revision is larger than expected, it's kind of like a signal that the rate hike in the near term is sort of needed to address the situation.
But remember what happened 2 years ago, exactly in April, when the Bank of Japan did not hike rates and we saw the yen just topping 160. Given that, as we have said, markets have largely priced in no move, does that mean, well, I don't want to say we can expect stability in the yen at this point, but are we less scared of a horrible move that could really derail markets?
Well, even if the decision was already priced in by the market, on the BOJ day, we have a higher risk of market action by the government. Because, for example, back in January, the BOJ kept the interest rate unchanged and the yen weakened. Then U.S. and Japan coordinated and did the rate check, basically linking up the banks to check whether current exchange rate is appropriate. Then that action itself, moved the yen as well. And also back in 2024 spring, and that's the time the government actually did intervention after the yen weakened past 160 per the dollar. And, and especially this time, Japan is entering the Golden Week holiday. The trading, it will be thinner, then liquidity will be much lower. So there is an incentive for the governments to step in now.
And you and I spoke to the finance minister last week, and she was talking about all of the speculation in the markets, right? So what should we be watching out for in terms of sort of signaling that we can get from Governor Ueda at the press conference about when the next rate hike happens?
Yeah, there are a couple things, but first things probably like whether Ueda will update the assessment of risks stemming from the Middle East. So far, Ueda and the other bank officials have been saying there are both sides of risks, upside and downside to prices. But, majority of market economists are seeing an inflation risk skewing to upside. So traders should be watching whether Ueda will agree with this view. And another thing is that Ueda probably shouldn't be overemphasized an uncertain aspect because it's easily associated with the situation last year around this time when the Trump-related uncertainty just caused the BOJ to suspend the rate hike.
The sweeping tariffs, basically.
Yeah, exactly. Yes. So we don't want, if the BOJ don't wants to, see the repeat of that, probably BOJ need to clearly tell that the bank is on track for the rate hike as soon as the outlook is materialized.
It'll be a very tricky communication exercise for the BOJ. Erika Yokoyama here in Tokyo. She's our economy and government reporter, of course, with what to expect from the Bank of Japan. In fact, our next guest also says the odds of a rate hike on Tuesday from the BOJ are near zero. Joining us now is Shrikant Kale, senior quantitative strategist at Jefferies. Shrikant, really good to have you with us. So will this be more of a messaging exercise when it comes to the decision on Tuesday?
Oh, absolutely. Tomorrow's day, an event with multiple implications across asset classes, as you already mentioned. The odds of rate hike tomorrow almost are close to 0%. So it's not it's an event which doesn't mean from a policy perspective, but it's an event which can give you a lot of signals in terms of what BOJ Governor Ueda is thinking about in terms of the next rate hike. For me, what matters are all the preconditions that are important for rate hikes still in place or not? If you look at the recent inflation data, the core CPI of Japan still remains above 2%. If you look at the recent inflation series published by BOJ last month, also continues to remain above 2%. And on the back of geopolitics, on the back of oil prices, we know the inflationary pressure is only going to rise going forward. If you look at the recent wedge data, Shery, the nominal wedge gains, the base level data increased by 3.3%, which is highest of the past 33 years. Now, I understand BOJ's mandate is not yen, but at 160 level, we all understand it can induce cost-push inflation in Japan. So all the preconditions that are necessary for rate hike do exist. The only fly in the ointment is the geopolitical uncertainty. So I would expect Ueda to wait out to have the resolution. Yes.
But the fundamentals, as you said, are there, right? So how much of this is also political in the sense that the government, this government specifically, doesn't want to see rate hikes too soon? And if that's the case and markets perceive it as the central bank lacking independence, could we see that instability that we've seen in the long end of JGBs?
To be honest, of course, there is a political aspect as far as the bond yields are concerned. But we have to also understand that Japan is eventually a warrant on global growth. The conflict that we are seeing right now, most of the Asian markets, including Japan, have strategic reserves. So we haven't yet seen the impact on the demand side of the equation, Shery. So if this conflict continues and the Strait of Hormuz remains closed, because of which global growth comes under pressure, you have to understand that Japan is a massive warrant on global growth. On top of that, Japan's operating leverage is highest in the world, which means the impact on Japan's operating profit going to be extremely high. So in light of that, I think it makes sense to me for BOJ to wait out tomorrow. As soon as we have the resolution on this conflict, that's the perfect time for BOJ to increase rates. Although BOJ's mandate is not growth, at the same time, it can have implications on Japanese inflation.
And of course, we have no certainty as to whether or when this conflict is going to come to any kind of resolution. But if you talk about the huge vulnerabilities that you're pointing to when it comes to Japanese economy, the longer this drags out, do you think this then endangers the virtuous cycle? You touched on the wage data a little bit earlier.
So there are two parts of this story. What we have seen with Japan over the past 3 years has been a massive bottom-up revolution, which was missing for Japan over the past 25, 30 years. We have seen doubling of buybacks to 23 trillion over the past 12 months. Dividends in Japan have risen to almost 27 trillion. Total payouts of Japan have risen to as high as 71% levels. Total yield have risen north of 4%. Cross-holding and money in Japan is accelerating. Activism surging to record high levels. All of these changes in Japan are unprecedented. What was missing over the past 3 years was this stable, pro-growth political leadership. So to that end, I think for the first time, Japan is seeing twin drivers of strong bottom-up revolution along with pro-growth political leadership, which makes Japan an extremely attractive investment story across the world. Again, my forecast for topics for the year end is 4,000. Japan is already up almost 35%. I'm saying topics from the start of last year. Bulk of those gains have been driven by significant valuation re-rating, which means valuation re-rating driven upside for Japan market going forwards are limited. At the same time, bulk of the upside for Japan going forward will be driven by sustainable delivery of earnings, which is what I expect. My expectation for topics are 14% earnings growth for March 2027. Of course, there are risks. If you're heading towards demand destruction, of course, there are risks to Japan, but that's not my base case. I'm expecting early resolution to this conflict.
You are watching the inventory levels, though, right? I understand that's more of a tail risk, but that's something that is worth being aware of?
Oh, absolutely. I think Japan is the only market where inventory as a percentage of sales data is at record high levels. Now, if you look at US and Europe, they're still at kind of average of the historical levels. But in the case of Japan, this significant surge in inventory actually happened on the back of COVID. And it was a sensible response from companies. If you break down the total inventory data of Japan, the early surge of inventory was mainly driven by increase in raw materials, where companies wanted to have a seamless production cycle. That's why they had requisite amount of raw material inventory. But that's not the cause of concern for me. The cause of concern for me.
Go ahead.
The cause of concern is the significant increase in the finished goods inventory, because all these companies, if we're heading towards an environment of global growth slowdown, then these companies with significantly elevated fixed goods inventory could be at risk of inventory write-down, or in worst case, inventory write-off. That's the risk for Japanese margins.
So, Shrikant, before we let you go, following up on my question on the volatility in JGBs that we could potentially expect from this decision, walk us through what you're watching in the JGB space, also in the equity space, because we have had significant optimism in the equities market in Japan, and where the line in the sand is when it comes to the Japanese yen weakness, when authorities could step in.
Oh, that's a long question. So my view on the yen, I'll begin with, which has implications on JGB as well. My view of yen since start of last year that we have moved from yen being a one-way trade towards becoming a two-way trade. Japanese yen was primarily a function of differential of monetary policies between BOJ and FOMC. That correlation has completely broken down since the middle of last year. Japanese yen has become a function of three things. One is this dovish rate hikes by BOJ, hawkish cuts by FOMC. So the fundamental bias for yen will be towards weakening. But at the same time, we have this fundamental backstop from Ministry of Finance at around 160 to 162 levels. So my base case is yen will remain range-bound between 150 to 160 levels. Now, as far as JGBs are concerned, Shery, I'm not a fixed income strategist, but on the back of what's happening, the expansionary fiscal policies pursued by Takaichi administration, on the back of no backstop from BOJ, no YCC, I'm expecting bond yields in Japan to remain elevated. So what matters to me is the impact of these elevated bond yields on the equity space. Over the past 25 years, during the periods of elevated bond yields, Japan market on average has delivered strong outperformance. Japanese yen has depreciated, and what you want to focus on as far as Japan market is concerned are the the risk-on styles like value, GARP, and yield at the expense of low vol and quality. That's what I'm recommending to my investors on the back of these elevated bond yields.
Great job in putting everything into perspective on the market. Shrikant Kale, really good to have you with us. Thank you. Senior quantitative strategist at Jefferies. And of course, you can catch Japan Ahead every Monday, 8:40 a.m. Tokyo time. Subscribers can also watch live on the terminal using the TV Go function. More ahead. This is Bloomberg.
Let's get more now on the weekend shooting in Washington, and President Trump has been using the incident to bolster his case for building a massive White House ballroom. Let's get more with our White House correspondent, Jeff Mason, who was at the event. And Jeff, of course, you're also a former president of the White House Correspondents Association. Talk us through what you saw and how things played out that evening.
Sure. So as most people know now who've been watching a bit of the news over the last 24 hours, the White House Correspondents' Dinner was taking place in Washington last night when an active shooter was able to briefly breach the security perimeter and exchanged gunfire with a member of law enforcement before he was captured. Inside the ballroom, I was sitting at a table with other guests and Bloomberg reporters, and I heard the shots outside of the ballroom. We then ducked and covered underneath our tables, as the vast majority of the ballroom did, and then really just waited for word about what was happening. There was a lot of sort of questions and not a lot of clarity about what was going on as we were waiting as to whether or not there was still an active shooter. There was speculation that proved not to be correct, that there might have been some kind of an explosive. And the Secret Service, of course, was focused on getting the president and the vice president and multiple cabinet officials out of the room. So not necessarily telling the rest of us what was going on or what we needed to do.
How are you expecting this to change the conversation around security, around President Trump? And of course, what are we learning as well about the gunman at this point?
Sure. So the security around any president is always a big deal and a big issue for the Secret Service and for the White House. The president has been painting this as a success story for the Secret Service because they apprehended this man so quickly and before, of course, he actually made it into the ballroom and was able to hurt anyone. As far as broader security questions, one of the questions is whether or not this dinner can happen again. The president said that he'd like to see it happen within the next 30 days, but whether or not that can happen at the same hotel and whether additional security measures will need to be taken, those questions are still being answered. It would seem like the answer, at least to the latter question of whether additional security is necessary, would be yes. As far as the shooter is concerned, he is a 31-year-old male from California, and there's been some reporting about a manifesto that he wrote and released very shortly before starting his attack, and that manifesto apparently suggests that he was targeting President Trump and members of his administration.
White House correspondent Jeff Mason there in D.C. Let's take a look at what the hour ahead holds. And of course, we are just about 4 minutes away from the start of cash trading, including here in Australia. It is an Anzac Day public holiday for much of the country, but the ASX is trading. We're looking like we're headed for a fifth straight day of losses here when it comes to Australia's stocks, not really benefiting much from, of course, the tech-driven rally that we've seen in other parts of Asia and, of course, in the US, driven to those record highs. We will be watching some of the energy names, given that we continue to see those upside moves in oil prices, the Strait of Hormuz shut down, inaccessibility at the very least, going into a third month now with still a great deal of uncertainty as to when these next peace talks will occur. Nikkei futures, though, looking pretty positive, about 0.5% higher there. We're also seeing Kospi futures looking like we'll see a run out of those gates. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens with global stocks around record highs. It's a big week, Haidi, of central bank decisions around the world, not to mention mega tech earnings as well.
You would not blame mainly central banks for being sort of paralysed by the inability to make any strong positions at the moment, right? With the uncertainty over the Strait of Hormuz, oil prices continuing to gain, no progress being made or momentum even when it comes to these peace talks. But at the same time, Shery, it's a very high bar for some of these tech companies to continue impressing with their forecasts.
And it's really that uncertainty that you mentioned around the Strait of Hormuz, around the war in Iran, that has really changed the tone for the Bank of Japan here, because we have heard more hawkish rhetoric coming from Governor Ueda just last month. For that to be all really turned upside down in the last couple of weeks, of course, growth concerns are now big. We are in an economy that's heavily exposed to Middle Eastern oil. So take a look at how Japanese equities are coming online. You can see a little bit of upside for the Nikkei, a little bit of downside for the topics, a little bit of divergence, as you can see. We're lacking clear direction as we head towards a Bank of Japan policy decision. Just tomorrow, no change expected there. 0.75% expected to be the rate. And as I mentioned, even markets were pricing in more than 70% chance of a move of a rate hike by the Bank of Japan just in March, for that to be virtually zero now this week. So we'll be watching the weakness of the Japanese yen against the US dollar, because remember what happened 2 years ago in April of 2024 when the Bank of Japan failed to hike rates. We actually saw the yen topping 160, authorities having to come in and try to support the currency. Do watch out for JGB's volatility as well. Take a look at how Korea is opening. We mentioned those mega tech earnings coming out of the U.S. Of course, we have tons of suppliers in Asia. We're watching Samsung, we're watching SK Hynix, which of course form about 40% of the Kospi. You can see slight upside early in the session for Korean equities. The Korean won also holding steady at the 1477 level, Haidi.
take a look, Shery, as to how we're trading in the first few minutes or so of Australia opening up. We're expecting liquidity to be a little bit thin, given that the likes of New South Wales, for example, off for Anzac Day public holiday today. But still, we are online. We're looking like potentially we could see that fifth consecutive day of losses for really the tech light market that we have here in Australia. But still, some of those energy names will be in focus, given that we'll continue to see those gains across oil prices. Brent crude coming online, seeing upside of about 0.2%. Also watching treasuries. It's a big week, as you say, for equity traders, but also for bond traders as well. Central banks really setting those rates, giving potential reasons to sell off those government bonds, particularly when it comes to treasuries. A great deal of uncertainty as we're still watching for what the next developments on the war will be. Well, joining us now is Jasmine Duan, who's a senior Asia investment strategist at RBC Wealth Management. Jasmine, great to have you with us. So, we are now heading into potentially a third month of disruptions when it comes to the Strait of Hormuz. There's now, of course, a lot of commentary around what the primary but also the secondary and tertiary impact of this energy crisis will be. What are you watching in terms of the major risks to investors?
We think it's very reasonable to assume the negotiations will be back and forth and we will take several rounds. But we still expect a compromise deal can be reached. And the major reason is because both sides wants to end the war, and both sides has laid out their conditions for how peace look like, and both sides have agreed to a ceasefire. And we think China plays a very important role in bringing Iran back to the negotiation table. So Iran's calculus is more than just how long the regime will last a prolonged war, and China will be the largest beneficiary if the two parties reach a deal. So we think China will want to both sides to have a rapid resolution. And of course, the risks will be to the impact to the economic and to the broader inflation. And we think, in general, risk may be smaller than we currently feared because right now the U.S. inflation risk has come down from the peak. And later this year, if we are seeing a deal is being reached, we may see few months of outright deflation. So inflation at the end of the year is likely to be lower than at the beginning of the year. So full-year inflation may be lower than we currently feared.
Some of those reasons would be contributing to why you're still overweight when it comes to US stocks. Are you seeing there to be a lot more runway when it comes to these record gains that we see being driven by big tech?
Right now, we are still cautiously optimistic in U.S. equities. Of course, in the short term, the U.S. equities may be a little overbought, but we are seeing some positives, mainly due to two reasons. First is the broad market participation is still positive. If we look at the advanced decline lines for the S&P 500, it's still at record high level. And typically, equity cycles doesn't end if the market participation is at record high. And also, if we look at the tech sector, it contributes to around 50% of the U.S. market cap. And the tech sector is coming up, delivering very solid earnings growth. And counterintuitively, energy crisis or higher energy price is a tailwind for the U.S. corporate earnings because since the start of the war, the S&P 500 earnings estimate has been revised up by 2.3%, and half of that come from the tech sector and half of that come from the energy sector. So the earnings growth is still very solid for the U.S. equities. That's why we are still maintaining an overweight position on the U.S. equity market.
How much of that will also be filtered through into the Asian market, given, of course, how many of those tech suppliers are across markets here in Asia?
Yeah, we think investors are trying to look for very solid earnings growth and solid sectors to buy into. And besides from the US AI and tech companies, investors are paying attention to the Asia tech sectors. Especially, we have a very large amount of suppliers here. So if you look at the earnings estimates by, for example, by of the Korea tech companies, the memory chips companies, they are expected to deliver 4 to 5 times earnings growth this year. So the earnings growth is still extremely solid, and that's why we're seeing investors' interest continue to go into these sectors. And for the AI tech companies, also we are seeing some positives coming out. The AI model capability continue to improve, and the valuation is relatively attractive compared to their U.S. peers. So investors may still turn attention to the AI Chinese AI companies.
Do you worry about the concentration of some of these big names, the likes of Samsung, TSMC, and their role in terms of their home markets?
Right, to some extent, most of the investors are only looking at the big tech names, and in the short term, we do see some risk of overbought, and we may see a period of consolidation in the near term. But overall, it will all come back to the earnings growth. We're seeing the big tech companies deliver very solid earnings, and that's why investors will continue to put their money into these big tech names. So we think the earnings growth will digest the concern on this overcrowded trades and also the short-term overbought in the market.
Outside of tech and AI, how else are you capturing the upside and also obviously mitigating the downside risks of the war as well?
Well, at RBC Wealth Management, we are trying to build a diversified and resilient portfolio so that we can mitigate the risk and capture the upside both from the war and peace scenarios. And that's why right now we are holding both energy, chemicals, and technology stocks. And we are also trying to capture the short-term market volatilities, taking advantage of the market movements to do some short-term tactical trades. And we think in this kind of market environment, investors have to be super nimble and flexible. And that's why we need to be more be more flexible and trade on the focus on some short-term opportunities.
Jasmine, really great to have you with us. Jasmine Duan, who's the Asia Senior Investment Strategist at RBC Wealth Management. More ahead here on the Asia Trade. This is Bloomberg.
Korean markets continue to gain early in the Asia session. You're seeing the Kospi now gaining about 1%. The Kosdaq also catching up as tech companies are leading those gains. You can see on the right side right there how South Korea's stock market rally has really surpassed a lot of other global markets. We're talking about the Kospi gaining more than 150% in the past year. Samsung and SK Hynix, of course, driving that AI boom, making up about 40% of the Kospi. And these Asian markets, in fact, muscling past European markets. Of course, they're more heavily focused on tech and those AI suppliers. Our next guest is at the center of a pivotal moment for South Korea's economy, as that AI-driven export boom is also tested by rising protectionism, energy supply disruptions, and, of course, the need to diversify markets and supply chains. Yeo Han-koo is South Korea's Trade Minister and joins me now from Singapore. Minister, it's always good to talk to you. Thank you very much for your time.
Thanks for having me.
I wanted to start asking you about this immense optimism and solid trade numbers, export numbers that we're seeing from South Korea. How much of that story do you expect to be derailed by the ongoing war in Iran?
I think overall, the Korea's export has been really robust. For example, for the last 10 consecutive months, the Korean export has been growing. And the last month, which is the March, our export hit the record level of $68 billion for the first time. I think it's really driven by kind of strong demand for semiconductors around the world. So despite some concern related to all the tariffs and uncertainty in the Middle East, I think the Korean export has been really showing robust performance so far.
Is there a risk that a lot of the materials, naphtha, rubber, resin, a lot of the things that could potentially go into the supply chains, especially around tech exports, will be hit given the ongoing conflict in the Middle East?
Yes, in fact, the supplies of the naphtha and these are being squeezed. So we are taking domestic measures to kind of restrain the export of this naphtha. At the same time, we really make all-out efforts to secure more naphtha from other region than the Middle East. Previously, 80% of our naphtha came from the Middle East. So we are exposed to this kind of potential risk in the region. And now I think diversifying is really a way to go. So now we are making all these efforts to find new alternative sources and partners for this.
Have you gotten any commitments from Asian partners? I know that you've been to India, you've been here in Japan, you're in Singapore right now.
Yes, the last week the Korean president made a state visit to India, and actually the Korea and India signed MOU on this cooperation in energy and this sector. Yeah, I mean, I think all these other countries are also struggling with this shortage of naphtha and other the chemical products, but we are making efforts.
I know that you've had perhaps some concerns coming from Indian authorities as well about the SEPA trade deal and how balanced it is. Will that have any implications to how much cooperation you can get from them?
Yeah, I think we had a really this great agreement last week in India to really accelerate this upgrade negotiation for Korea-India, SEPA. I think we have really this great potential. I mean, our economies are complementary. A lot of Korean businesses in automobile, electronics, and shipbuilding, they have invested in India, and they are considering investing in India. So I think upgrading this almost 17-year-old, the framework of trade and investment will actually really boost further trade and investment between our two countries.
And one of the trade deals that we're watching the most is the one between South Korea and the United States, right? Can you give us an update on the implementation of the $350 billion U.S. investment package? Have you chosen your first project? We're hearing that it could be the Louisiana LNG export project.
Not yet, but I think we are on the right track. The last March, Korea's National Assembly passed a special law to operationalize this $350 billion investment fund. So now we are in the process of creating new government agency to execute this investment the project. So now we are in a preparatory mode, exploring this what kind of project could be really mutually beneficial. I think what is important to Korea is to really make sure that those projects are commercially viable and mutually beneficial. If that's the case, I think this could be turned into a really new opportunities for many Korean companies to invest and forge stronger partnership in manufacturing sector with the United States.
Does the Louisiana LNG export project count as one of those feasible ones?
I think that, we are not at this stage to really reveal what kind of projects are being explored and then discussed, but I think we are open-minded about this mutually beneficial and the strategically important those projects in energy and many other sectors.
What's difficult for South Korea and other partners is that the U.S. has also opened a new 301 probe, right, into excess capacity. Any more updates on what's going on there and how you plan to mitigate the benefits that you've gotten from the trade deal so far and the commitments?
Yeah, last November, our two leaders have agreed on this trade deal in APEC summit in Gyeongju. And we are in the process of, faithfully fulfilling this implementation. But with this, the Supreme Court ruling on IPA, I think right now what U.S. is trying to do is to restore the previous level of tariff, with the 301 investigation. So now we are in really productive and close consultation with the U.S. to really make sure that our trade deals will be honored and the stability will be brought back to our mutual, the bilateral trade.
And of course, Minister, a key issue is also what's happening between the relationship between China and the United States. What do you hope to see or expect to see from the President Trump, President Xi Jinping meeting in May that could help potentially the global trade environment and what's happening between South Korea and these two partners as well?
Yeah, right now, China is our #1 trading partner, and the U.S. is #2, but it's really kind of neck and neck. So I think it is in our interest to see that stabilization of this U.S.-China trade relations being, realized. So we hope to see that some more predictability and more stability could be secure through this kind of the high-level talks.
And of course, Minister, given, of course, the tensions between the U.S. and China, the geopolitical tensions, of course, in the Middle East, the war in Ukraine, we have seen incredible focus on the defense industry. Here in Japan, the government has lifted restrictions on lethal weapons exports. Do you expect to have that a meaningful impact on the competitive edge of South Korea's defense industry, which was also huge?
I think that Korea's the defense industry is actually one of the strongest because we have a really strong manufacturing base, and for the last because of unique the security environment in the Korean Peninsula, I think the defense industrial sector has continued to develop their supply chain. So now I think the defense industrial sector could emerge as one of the strong engines for export from Korea's point of view. And I think we are exploring all these possible multilateral as well as bilateral cooperation in this defense industrial sector with key partners around the world.
We had the news, of course, last week of the Japanese government rejecting, for example, the buyout of one of the companies, Makino, by MBK, for example. Will that alter the relationship between Japan and South Korea? And what would that mean for future cooperation?
We also learned of this case, but I think this is a kind of specific business case. So we are looking into this case right now, but I think it's too early for me to make any kind of comment on this.
Minister, then before I let you go, how long do you expect this, what some are calling the super cycle in the tech industry, especially with semiconductors, to last? And will it get derailed, or is there the risk of getting derailed by not only the geopolitics around the Iran war and the supply chains, but just the cyclicality of this sector in general, given how much the Korean economy depends on this industry?
Yeah, indeed. Right now, I think one of the strong the driver for our growth in terms of GDP and exports seems to be coming from the semiconductor industry. And as you mentioned, this is highly cyclical. But I think what is important to Korea is to also diversify our source of industrial growth as well as export. So if you look at our export performance, not just this the semiconductor sector, but also these newly emerging sectors. For example, this K-culture related beauty products and food and also cultural content. They are also emerging as a new engine for the growth and export. So I talk about the diversification in terms of energy sources, but not just that diversification, but in terms of our own industrial and export strategy. I think diversification seems to be the key and the core strategy for us.
Yeah, of course, the world very much enjoying all of that K content. Minister, it's really great to see you. Thank you very much for your time. South Korean Trade Minister Yeo Han-koo there joining us from Singapore. More ahead. This is Bloomberg.
A 31-year-old man is set to be arraigned on Monday over Saturday night's shooting at the White House Correspondents' Dinner in Washington. The acting Attorney General says the suspect was probably targeting Trump administration officials, but his exact motive is not yet clear. The president told 60 Minutes why there appeared to be a delay getting him and the First Lady to safety.
Well, what happened is it was a little bit me. I wanted to see what was happening, and I wasn't making it that easy for him. I wanted to see what was going on. And by that time, we started to realize maybe it was a bad problem, different kind of a problem, bad one, and different than what would be normal noise from a ballroom, which you hear all the time. And I was surrounded by great people, and I probably made them act a little bit more slow.
Meanwhile, peace talks between the US and Iran have stalled after President Trump cancelled a planned trip by his top envoys. Tehran says it won't negotiate so long as it's being threatened.
It's very simple. Look, that whole deal is not complicated. Iran cannot have a nuclear weapon. Very simple.
Is the ceasefire remaining? Will you continue the ceasefire?
Haven't even thought about it yet.
Did they offer anything in return to 20 years of suspending enriched uranium?
They offered a lot.
What did they offer?
They offered a lot, but not enough.
We'll take a look at how we're seeing this continued uncertainty over the US-Iran war play out. And Brent crude WTI continuing to jump. We're seeing 2% gains there when it comes to Brent crude. Of course, markets contending with really the extended impact of what is already being seen as the biggest energy shock in history on the supply side. We're also seeing, though, that continued drive when it comes to AI and tech-powered gains for Asia-Pacific, particularly when it comes to North Asia, South Asia, Southeast Asia, of course, has been quite a different picture in terms of the more outsized impact of that oil story. But the MSCI Asia Pacific at the moment seeing upside of about 1/10%. It's a big week when it comes to tech earnings. Of course, a lot of the US giants from Meta to Alphabet to Amazon all really set to really not needing to just meet expectations but out deliver when it comes to that forward look ahead there. S&P futures down about 0.2%, but of course that is a market that has been pushed to record highs from these tech stocks. More ahead here on the Asia Trade. This is Bloomberg. Take a look at how Asian markets are faring. We are really continuing to see that bifurcated or correlated dynamic when it comes to certain markets. North Asia in particular, Taiwan, of course, yet to come online, but we're watching Japanese and Korean stocks continuing really to benefit from this AI and tech-driven rally. The chip sector, of course, a major heavy lifter at this point, particularly when it comes to markets like Korea and Taiwan. The Nikkei 225 at the moment looking pretty flat. Here in Australia, it is a holiday-thin session with public holidays in some major parts of the country, so we are seeing pretty tepid downside, 0.6%. We are seeing Australian stocks headed for that fifth session lower. We also do have quite a lot of data today, not in addition to earnings in Asia, but we're also looking ahead to some of those PMIs, industrial profits due out in China today as well. Well, legacy foreign automakers once dominated in the Chinese market, but the 2026 Beijing Auto Show, tells a very different story. Domestic EV makers, they're stealing the spotlight, winning over consumers with flashy technology and aggressive pricing. Bloomberg's Stephen Engel reporting from Beijing.
Here's a question for you from the Beijing Auto Show 2026. Is globalization over? Well, that's debatable, of course, here in the auto industry when you have a whole collection of legacy foreign car makers competing, of course, with the new entrants in the EV space in a highly competitive price war environment in China. The difference, I would say, is it's still a global industry, but the country that's in the driver's seat perhaps has changed.
For decades, foreign car makers flocked to China with the price of entry essentially being technology transfers to their joint venture partners. Fast forward to 2026, a reverse of that dynamic is on full display. It's the foreigners looking to partner for Chinese technology to stem the tide of their massive market share losses here. Hyundai Motor, for one, is launching its arrow-shaped Ioniq V with local partner BAIC, with autonomous driving tech from Chinese software firm Momenta and batteries from China's CATL. Volkswagen, too, has a relatively new partnership here and a 5% stake in China's XPeng.
Co-developing, co-engineering the ID Unix 08 and 09. It has all the bells and whistles that the Chinese EV buyer wants. Like here in the cockpit, for one, it's all the rage in 2026, and that is touchscreens from the driver's side all the way through to the passenger side. Keep in mind, Volkswagen used to be the #1 top seller in China of passenger vehicles. They're up against it, though, but they decided China is too big to ignore. They're going to embrace partnerships with the likes of XPeng to recapture some of that lost glory. The legacy American car makers like Ford, also GM, I see Buick right over there, Cadillac's in another hall. They're also here at the Beijing Auto Show, facing the same headwinds, if you will, as the other foreign car makers in this hyper-competitive Chinese market, which is dominated by EVs and also a price war. And that begs the question, how are the Americans, like Ford and their Bronco, how are they going to capture the attention of the Chinese consumer, and how do they strike up new partnerships with the new generation of Chinese car makers amid the tariff regime in the United States, where they slap 100% tariffs on Chinese EVs shipped to America? Feature-rich and quick feature refresh are the hallmarks of Chinese EVs. Like Shery's, it's risen to the top of the ultra-luxury segment in China by offering a lot of funky options for its big SUVs, like this, the latest M9. It offers refrigerators on board, karaoke systems, and this one, the headlights even turn into mobile projectors in color. They've also licensed technology for an onboard toilet for some vehicles, if that's your thing. For the multitude of domestic Chinese EV makers, it's all about grabbing attention while they're still alive. Because there's going to be a reckoning. With this price war, it's just the beginning of a weeding out period. So companies like this with the GAC, which is Guangzhou Auto, I'm not saying that they're not going to survive, but they're going to be one of the car makers that is going to be fighting for survival. Many people I've talked to here at the Beijing Auto Show say by 2030, so in just 4 years' time, there could be far fewer. We're talking from dozens to a handful of domestic EV makers by the end of this decade. Stephen Engel, Bloomberg News, the Beijing Auto Show.
And it's a busy week for earnings for Chinese automakers as well. We have BYD and Geely reporting this week in what will be one of the busiest weeks for Asia's current earnings season. Bloomberg Intelligence says they may be poised to benefit from higher EV demand given the oil shock. Asia Equities reporter Charlotte Yang joins us now from Hong Kong. What are we expecting from BYD and Geely then?
Yes, it's an action-packed week for China EV investors. As they're just concluding the Beijing Auto Show, the eyes are now turned to the earnings results this week. And you have BYD, the sector bellwether, reporting on Tuesday, and then it's aspiring domestic challenger Geely reporting on Wednesday. So the earnings picture is looking less rousy, unlike the early optimism over its strong overseas demand. While the overseas demand has been really strong, especially since the Iran war, where the oil shock has boosted consumers' awarenesses of buying new energy vehicles, investors are more focused on how much of those overseas sales can actually meaningfully cushion their domestic weakness. So for BYD, even though overseas story is so strong, you're expecting its first quarter sales to continue to decline for the third consecutive quarter, and earnings per share is expected to decline for the fourth consecutive quarter. And for Geely, while overseas while sales overall on a stronger beat, we're also expecting to see earnings coming into pressure. So I think for investors, the key is now shifting back to profit. How much money do you actually make per vehicle, and how does that compare to the previous quarters? Domestically, you have the discounts for selling new models, and also there is a rising material cost. So a lot of the tensions will be actually focusing on how are they able to manage those raw material costs and how are they coping with the domestic discounts.
busy week. In fact, the busiest week when it comes to Asia Pacific and earnings. What are you watching out for, and how high are the stakes?
Yes, so it is a busiest earnings week for Asia Pacific earnings. You have over 400 companies that make up that are members of the MSCI Asia Pacific Index reporting. And this earnings season, every earnings seasons matter, but this one is different because it provides a first window for us to gauge the impact from the Iran war. So a lot of the tensions will be focusing on those, for example, energy companies, defensive companies that are seen as more benefiting from the higher energy prices. Well, on the other side, like we mentioned, for transport like airlines and also some of the consumer companies, the focus will be on how are their profitability responding to these higher energy prices. So if on the airlines front, you have Air China reporting. Also on the oils, you have PetroChina. And another sector that's focused is obviously AI that has been continuing to show really strong momentum. We're seeing Korea's Kospi, Taiwan hitting fresh highs. And this week you have MediaTek reporting that has been getting so much on the optimism tied to the TPUs. And also today you have Japan's Advantest that will provide some color in terms of those AI testing. So I think overall the energy sector, transport, as well as the tech sector will continue to be in focus.
Bloomberg's Asia Equities reporter Charlotte Yang there. Well, China's auto exporters had a strong March. Overseas sales of electric vehicles and hybrids hitting a record high due to rising gasoline prices. But Bloomberg Opinion columnist Juliana Liu says one of China's largest EV joint ventures is failing to capitalize on the oil shock and is losing ground to bigger rivals. Juliana joins us now in Hong Kong. So you're talking about Wuling. Why is this company losing ground to the likes of BYD, Geely?
Well, as we just heard from Charlotte, BYD and Geely, in terms of exports, it's really going gangbusters. These are the biggest and baddest competitors in the car market, not just in China, but increasingly globally. So, and Wuling is a relatively small joint venture in the southwest of China. So we're not really talking apples to apples. But that said, one thing that Wuling has is a line of low-cost, extremely affordable mini EVs that it's been rolling out over the last few years. And you would think that this is exactly the kind of model that should be poised to be doing really well during this generational oil shock. It's really tiny. It's about 1.5 meters high and wide. It can seat maybe 4 people at a squeeze, and it's something that is well poised to kind of take over from the kind of two-wheelers that we see across South and Southeast Asia, and these are countries that are really suffering from the oil shock. So a great opportunity for Wuling. Its cars have been doing really well in China. Its flagship model, when it was launched about 6 years ago, it was the best-selling model in China for 2 of those years, and last year it was the second best-selling after Geely. But we're not seeing it really take advantage of this generational opportunity. Its sales in the first quarter were down 7%.
Tell us about taking really advantage of that opportunity. Is the blame here to be put on the owners like SAIC and GM?
So I think what's going on here is that paradoxically, Wuling is not a problem child. It's actually chugging along quite well at a time when GM is going through lots of ruptures, lots of changes. At a time when SAIC seems to be really focused on its own brands, like its own MG and Row. And that strategy looks to be going pretty well because its first quarter sales were actually up 40%. And of course, this is when the entire market is shrank in that period. So SAIC, the senior partner, very focused on its own brands. GM focused again on other things. It's got its own separate joint venture with SAIC, and the two are in talks, according to Bloomberg News. We've reported it's in talks to resume that 30-year joint venture, but we don't actually have word yet. So it really looks like the attention is really elsewhere, and some of this opportunity is being missed.
The oil shock, when you talk about this sort of missed moment, right, do we see a permanent loss of competitive edge here, or is that something that could be regained?
No, so I wouldn't say that it's exactly losing its competitive edge. I think the edge is still there, and I think even this year we'll see the Hongguan Mini doing fairly well in China. Although I have to admit the loss of subsidies, the pullback of subsidies is hitting mini cars especially hard. But I would say, what makes it competitive still makes it competitive. In this case, unfortunately, it's a loss of opportunity rather than a loss of competitiveness, if that makes sense.
Bloomberg Opinion columnist Juliana Liu there joining us from Hong Kong. Right, take a look at some of the big movers in the Japanese session right now. We are watching shares like Denso at the moment as we heard that it's set to withdraw its proposal to take over semiconductor maker Rome. The two sides were unable to see eye to eye on an offer, according to local media Nikkei. We're also following the likes of Fanuc. Their shares surging now. More than 11%. Their forecast beat estimates. The automation equipment maker's outlook was solid on the demand for robots. And you're also watching Kian's shares popping at the moment, more than 15%. This is a maker of factory automation sensors reporting quarterly operating income above analyst estimates. We have more ahead. This is Bloomberg. Robocar startup Glydways is in talks to raise $250 million in a new funding round that could push it to unicorn status. The Sam Altman-backed company is pitching a future of pod-like vehicles that provide on-demand rides on dedicated expressways. Joining us now is the founder and co-CEO Mark Seeger. Great to have you here in the Tokyo studio.
Good morning. Thank you.
So you're in a very capital-intensive development stage right now. What are you planning to do with it?
Well, the fundraise that you're referring to is really a reflection of the momentum we're seeing in the business. This year, we're launching 4 customer-funded pilots, and next year, we're launching our first commercial systems around the world.
How viable is your technology right now, especially as opposed to, say, open-ended, on-the-road autonomous vehicles?
That's a great question. So open road robotaxis that we see a lot in the United States and certainly in China, I mean, they're really exploding there. To us, those are AV 1.0 because, Shery, an autonomous vehicle stuck in traffic is just a car stuck in traffic. And if you deploy hundreds or even thousands of autonomous vehicles, robotaxis, on congested streets, you're just going to make congestion worse. What we think is that autonomous vehicles, AV 1.0, are just a stepping stone to putting those vehicles on purpose-built flow networks. And that's what Glydways does. We build flow networks. We're a new mobility system that is designed around continuous movement instead of traffic. And so you don't stop, you don't transfer, you don't sit in congestion, you go directly to where you want to go. And because Glydways is built as a network rather than a collection of vehicles, we deliver far greater throughput capacity at a fraction of the cost. And that's why cities around the world are deploying it.
And you're talking about cities, especially metropolis. Is that why you're here in Japan? I know that you have a lot of Japanese partners as well.
We do. We're in Japan, and we're in the Middle East, and in South Asia, and in India, and various other places, because the through line around the different markets around the world is that people are realizing, not just cities, private developers, airports, we have lots of different kinds of customers, they're all realizing the same thing. And that is that trying to manage traffic is a losing battle. Our mobility systems today, whether they're subways, buses, or cars, are all based on the concept of interruption. Well, that's not going to work. We need something that scales infinitely, and that's what a flow network is. Now, Japan is very special for us. Japan is a market not only where people understand first principles thinking here and system design thinking, but some of our most important strategic partners are in Japan too. Let me give you one example. Suzuki. Suzuki is an incredible company. They're over 100 years old. They have more engineering and manufacturing acumen than a company like ours will ever have. So they're not just part of our scale plan. They're core to our strategic execution globally. And that's why we're in Japan. Now let's talk about the Middle East for a second. The Middle East is all about ambition. The governing philosophy in the Middle East is leapfrogging. They don't ask the question, how can I manage traffic? They ask the question, how can I leapfrog traffic altogether? And so the same through line is what we're seeing all over the world, in the United States as well, and in parts of India.
Do you have a target in terms of how many cars you're targeting to manufacture per year or per project with Suzuki?
We don't actually have a target because we don't think about it as individual vehicles. We're providing a flow network, and a flow network is a system. When you're thinking about AV 1.0, that's a question of how many vehicles are out there. But when you think about flow networks, AV 2.0, the winners are not the people who build the vehicles. The winners are those who control the networks. And we provide the network layer. That's how we think about ourselves. And so we care about how many people can we move quickly and help decongest streets. You know, one of the things that we've learned and that we can all relate to is that traffic is a quiet filter. It's kind of a repressant on human potential. And we want to relieve that. And the best way to relieve that is to provide better access to mobility, because for that, you get better access to economic opportunity. And that thought, that fundamental mission statement that we have, aligns very well with cities and private developers whose mandates are congestion relief and, of course, emissions relief.
You touched on the Middle East as another key market, and I know that you've just wrapped up a trip there. Given the ongoing geopolitical uncertainties, the uncertainty of the war, can I get a bit of insight in terms of what sort of investor sentiment, what risk appetite felt like while you were there?
Certainly. It was quite extraordinary. If I can take a step back, what we're seeing in the Middle East right now and what I saw over my trip during the last 2 weeks there is, frankly, business as usual. Ambition is extremely high. They're trying to remove roadblocks, no pun intended, to getting our product out there. We're launching our first trial there in September this year. So things are moving along, and they're pushing us to move as fast as we can.
What do you see as being the major competition? I know China is obviously one of them. Are there sort of lessons learned when it comes to that market, which is in a lot of ways quite a pioneer market for a lot of this new technology, right? Do you think there are things that have been achieved in that market that can be replicated, or similar types of momentum be achieved in other markets?
What's happening in China is extraordinary. I mean, autonomous vehicles and electric vehicles are indeed exploding. But I think we have to take a step back, which is that the autonomous vehicle is an extraordinary piece of equipment. It's an amazing, revolutionary new technology. And if I may, the example I like to think of is the internet, which when it was invented some 30 or so years ago was a revolutionary technology. But like robotaxis, when you try to take a revolutionary technology and fit it onto an existing infrastructure, an existing roadway built for human riders, and the internet at that time was fit onto copper wires built for human voice, you constrain it. You really have to think bigger. You have to take this revolutionary technology and put it on something new that really releases the full potential of an autonomous vehicle, a robotaxi, which is one of experience, so you don't have to sit in congestion, one of capacity, you have to move more people in less space, and of course one of economics. So in the same way the internet was unconstrained when it was moved from copper wires built for voice to, let's say, fiber optic, autonomous vehicles really are the stepping stone to AV 2.0, where you take those vehicles and you orchestrate them very carefully on a dedicated flow network. And that's what our customers around the world, which are both cities and private developers and airports, big and small, are starting to see. And we're trying to catch up to demand.
How challenging are the regulatory hurdles, especially between jurisdictions?
That's such a great question. For us, because we're eliminating the, let's call it the infinity problem of guessing what a human driver is going to do, or a bicyclist or a pedestrian who's maybe going to cross the road or maybe going to get into their car, an autonomous vehicle, AV 1.0, has to account for all of that. And so the regulatory framework is really tough. For us, we find the regulatory frameworks are actually an enabler because we eliminate most of those uncertainties. We have dedicated lanes and nobody can walk on them. And so for us, we find that our regulatory frameworks align to the mandates that cities have when we talk about cities as a customer, which are, again, reducing traffic and reducing emissions.
Mark Seeger, really good to have you here, and our Tokyo studio founder and co-CEO of Glydways. We have more ahead. This is Bloomberg. Take a look at Japanese banks. We have seen immense pressure on financial institutions as we head towards a Bank of Japan policy decision tomorrow. No rate hike expected. We're seeing more downside after Nomura had their biggest drop in almost a month, This is Japan's biggest brokerage. They reported fourth quarter net income that missed average analyst estimates, given some impairment losses. But of course, with the bigger picture being, of course, the rate environment here in Japan, we have seen a week of pressure for Japanese financial institutions. Nomura's full-year profits still hit an all-time high. The company did benefit from volatile global markets and, of course, a boom in investing and deal-making here in Japan. Heidi.
Take a look, Shery, at how we're setting up when it comes to one key market that we're watching very closely, right, of course, is Taiwan when it comes to the outsized impact of TSMC being one of the big drivers of this AI and tech-related rally that we continue to see in Asia. This is a picture as we see Hong Kong futures looking a little bit more optimistic, 0.3%. We're seeing A50 China futures also in the green. We do have industrial profits out as well as China PMI numbers looking to hold up pretty well in growth territory later on. We do have just some commentary out at the moment from China, really talking about these trade restrictions, saying that they're watching the EU progress when it comes to rules. This is the accelerator project. They're willing to talk, but they can take countermeasures against EU rules if ignored to remove those rules discriminating against foreign investors.